All right. Good morning, everybody. It is Tuesday, April 16th, and we'll go through several of the markets here. Starting off with ES as we normally do. So the market sold off yesterday. We went imbalance down. And for today, chat, if you have any questions, you can, if they're about the advanced course, put them in the elite room. Otherwise, chat will be in the professional room. And if I miss something, just tag me so I see it pop up on my Discord. So ES went imbalance down. We're looking for the market to find balance. What I'm really going to watch for is, was this end of the day? Shoot, I don't really want all those drawings on there. Basically, was this end of the day area between 51.20 and 50.86 now? Is this going to be balance? I do expect an up move at some point. I don't know. We'll have to see what incoming order flow is, but we have Powell at 1:30 or 1:15 today, Eastern. That's going to be the big catalyst that everybody's watching. I'm watching treasuries, and we can touch on a few of those as well as we head in there. We came down right to the low end that we were looking for within, let's see what it exactly was. I want to say it was a point away from low end of the range on this. I guess about 2 or 3 points away from our low end of our range here at 50.76. So a bounce wasn't a surprise. I laid out some of this in the room. It seems like this, and I can do this in the elite room a little bit more. But some of this we had talked about is getting very extended, and we have signs telling us that. And so looking for some kind of bounce today. I do expect downside bigger picture to continue, at least for the short term, as we see that volatility is rising and volume is starting to pick up. And again, this aligned with our COT videos from the last few weeks that commercials were getting short, and we would look for them to build a position heading into the summer for Q2 and markup as they built a position into October and then marked it up for 6 months. This is going to be that reaccumulation phase and kind of that stage 4 in Wyckoff method. So ES today, the big levels that I have that I'm watching closely are going to be this 5108, 5150 is going to be a lot for me. 5070, and on the downside 5050 if we get an extension. I don't know that'll come before PAL. Basically, the two scenarios I see is if the market goes down before PAL, then we're going to end up with an up move on, any bullishness or dovishness that he presents. If the market, probably the top scenario I'm looking for is a neutralize before that. So make a push up to 5137, maybe 5150, and then go down on his commentary. We've talked about the macro headwinds that rate cuts are not likely, and actually rate increases are more likely to get priced into the markets, and it's starting to slowly transition to that phase. So that's it on the ES for today. If we look next at the NQ, we are stuck between conflicting agendas. In the overnight, low end of the range was at 17,786, and we came just about right down to it. I mean, within a couple points on the NQ, and just stuck between two agendas at the moment. So we'll see how this resolves, but very similar. I'm looking for some kind of neutralizing bounce. If we get over 17,912, then 970 is the critical point. This would then bring rotation up to 120. Otherwise, if we fail here, this is going to be ideally a short that's going to take us much lower, probably to this lower area. And if this does occur, I will take my large chunk here and break it out into reasonable trading zones. It's just an area that I'm expecting a big reaction. Let's Same thing there. We are imbalanced down. In terms of things that you should know from a flow standpoint, we are going to have some forced selling coming in from margin traders. Other things that we look at, semi-neutral. We do look for exaggerated moves today. And again, I would wait for the market to give you a confirmed sign of turning before really trying to trade it. That's kind of the environment that we're in at the moment. Next, we've got RTY. So RTY is the most bearish of the indices. And I think we're starting to resume the bear market again. So we had a nice little pause on it, and now we are getting a return to the bearishness. So back under 2000 is critical. 1953 is going to be the big sign. If we get under 1900, we're probably looking at taking out the bear market lows and probably down to like 1740. But that's more very, very macro. For today's standpoint on what I'm looking for on the RTY, let's see, 1958 would be a nice long if we get an extension down. Otherwise, if the market starts to give signals on turning, 1992, although I'm less likely to trade this on the long side, 2038 is my ideal short. So in this 32, 36, 38 area is where I really want to get short, and probably trade IWM options there. The volatility on the RVX is solidly in the F bucket, for censoring language here. It's rising, and everybody is going to end up hurting on this. And we can get into some of this on tomorrow's for the elite. If somebody wants to remind me on how this is affecting everything that will come in beginning first of the month in May and kind of moving ahead. Basically any bounces in here up to 2053, 2063, 2038, that's where I'm looking to short the market. To get, again, the commercial side, the dealers, the market makers, whatever term you want to use for them, their job is to provide liquidity, but at the end of the day, they're not going to lose money. If you've ever looked at anything that comes out from Goldman Sachs, Susquehanna, Citadel, their earnings reports, I mean, they don't lose money. So as we're coming down, they will buy and they will push the market aggressively in this kind of regime to neutralize and get rid of what they've had to take in. So I would look for that, but I'm really only interested in trading that around the 1952 area, 1952, 58, somewhere down here. And then we'll touch a little bit on commodities, and then I can go over questions if anybody has any. So oil laid it out yesterday, 84.40 to 86, and that ended up happening in the overnight. So unfortunately couldn't hold it for the whole move, but move happened, and then that's still the same short. This has now moved up just about 10 cents, so 10 ticks. Not much of a change there. Looking at rotation, some of the things to pay attention to on oil is potential bull flag forming on the yearly chart. If we get over 86, I'm looking for 87.20 pretty quickly, very similar to what happened here. I don't know that we're going to run this high yet. I think we would need some kind of pullback and consolidation first. If CL breaks 83.60, then the trend is likely to break. So that's kind of my line in the sand on the downside there. And if we can get over 87, pull back, and then hold 86, we should make a run towards 90. And again, with inflation rising, we've been talking about this pretty much since January, that oil is leading the inflation charge, and we would see 90 after coming into prior year's value area high. And that's the setup that we're coming into right now. So the only thing on that's saying right now short-term sideways or consolidation is, again, its volatility is rising. So we're going to see wider moves, bigger swings, and could see, extensions from this rotation zone to being more these yellows or green and red, the bigger edges. For my trades today, I'm really looking for 84.5, 83.6, or ideally that if we get over that 86 to that 87. Short on the short side, really only interested in it if it gets up close to this 87.20, maybe 86.80. Those are the only two areas I'm considering it, just given the positioning and the setup right now. I would rather trade it on the long side. If we look at, let's see if I've got gold. Okay, so gold. Laid out in the COT video, 23.45 was the critical level. Below that, 23.25 would be, but yesterday we held that 23.45 right up to 23.85. That was a nice 40-point trade. I know some people caught that, so congratulations there. And now I'm looking for, again, this is going to be kind of opposite of what the markets would do today. Is if the markets are going to rise, likely gold's going to stay sideways or down. We can watch the 10s, we can watch the treasuries with this. That's where the TLTs are really going to come into play. But 24.25, I don't think we're going to run a high of the year and an all-time high yet. That's where I would expect bigger resistance to come in. 23.85, this right here is kind of the line in the sand for me for the day. Underneath that, I can look for shorts down to 23.45, and then look for lower. Otherwise, I don't know that there's enough meat on the bone, because I don't think we're going to get up to over 24.25 today. But we'll see. We can watch, like I said, the 10s or the TLTs for signals on that, because you can use those as proxies. For the long side, I'd look for 23.45, 35, or maybe down to 16. But if we start breaking 25, I'm less likely to trade this really at all, and just let it kind of set up over time. Let's see what else. I don't know if I can get a treasury chart up without some of my other information on here. Let me see really quick. Try to pull that up really quick so you know what to look for. On So I will move this one over. We've talked about this before, so this is nothing too proprietary or anything like that to show. On some of the TLTs, I won't show, the ranges and things like that at the moment, but as we are this is the same thing we saw in the summer, and we talked about this before, is, as we started breaking out over the summer and the 10s were leading the way, that macro was breaking down. As the economy is accelerating and 10-year yields, longer term yields are going to rise, then the market sells off. We've talked about this since, gosh, I don't know if anybody else remembers. I think it started in January, maybe December. We talked about these major levels, and we finally got over it. So now we're looking very similarly that this is going to start that kind of sell off, as we've been seeing. And so it's putting together all those kind of little pieces. On the 2-year, I'm really watching 5 as short-term rates. So everybody at the end of the year was pricing in cuts, and you had the 2-year dropping. Now that all those bets are unwinding, because in December it was a 97% chance we'd have a rate cut in March, and we'd have 6 cuts this year. Now it's about 57% that we'll get our first cut in June, so roughly a coin flip. and this is rising, which actually, again, says that rate hikes could be possible, or at the very best, higher for longer and no changes on rates. Cuts are not possible. This plays into Powell speaking today. So if you are going to be trading any commodities, this is something you definitely want to be paying attention to. And then I can post a few of these charts. On the dollar, I'm really watching 105.87 closely. Had a nice move up on it. Everything is saying longer term upside. Again, I'm expecting some kind of pullback as the markets would rally. And 105.87 is where we're going to watch. And then down here we have our VIX, and we came right down to the kind of the critical level at 1675. And we'll see where that goes from here. As long as that holds, then it's, headwinds in the market. And then on the equity side, NVIDIA, major levels I'm going to watch are going to be 889 and 813. AMD, again, with the being in the chips and AI space, 158 and 174. And then I have a few others if any elite suits are interested, or if you are watching options. Again, that's something we can go over as well. Other than that, again, macro perspective today, we should see some kind of bounce in the market as the size traders de-risk into the event. That's going to be the big thing. The question is, do they do it before, or do they get a transcript of what's going to be said beforehand and they drop the market and then the bounce comes after? They have to provide liquidity, but they also control the market and control, their risk parameters. So they will step in and move the market in different ways at times, and that's really what you want to be watching for. So any questions at the moment? I will try to answer them as best as I can. See, Medi's typing. I can do that, Medi, in an elite room. That's also going to be a formal lesson I do with the new course, and you guys will have that, but that's not really for this PMP. But I can send you a DM about that if you'd like. Okay. Anybody else have any questions at the moment, or anything that you're one I will try to touch on here. Let me see if I got a chart of it. So I don't have the levels drawn on the chart here, but we went over this on the COT video as well, is Bitcoin. And the levels that we went over in the COT video, I missed the short yesterday on this. So 66, 315 was a big level. If we just draw. So this was kind of where we talked about in the COT video. So the levels that were laid out there on the COT were, for anybody who hasn't seen that yet, if you want to note any of these, 68,644, 66,315, 61,255, and 56,3. Given that commercials are short, I'm looking for downside, and we had a nice move right at 66,315 for 4,000, roughly $4,000. On the futures, that would be a very nice trade. It is a very thin market, but if you have some of these factored in, so we didn't quite get to 255, We did come down under 62,000, but we're getting towards the low end of the range again, so a bounce kind of as expected. But this is where I would watch again if we come up to for another short, and I can do deeper analysis if anybody wants a chart on it. But with commercials being short, with the halving this weekend, and if we go back and look at history and how it rhymes doesn't always repeat itself, we can see that heading into the halving, we normally get a down move, which is what commercials are positioned for. And then afterwards, we can typically see some kind of rise over the next few weeks. And so then I'd watch for that to shift as well into the next couple of weeks in positioning. And so any professional subscribers, you do have those on your Discord under COT reports. And Elite, you can get the charts as well on the website. That kind of gives you what I'm looking at today for the markets and some of the trades I'm looking for. A reminder for Elite students, we do have a roundtable today at 2:30 if anybody's interested in joining. If there isn't, we won't keep the event scheduled. Just put in the room if you're interested in joining for that or not. And then other things on the calendar that we have tomorrow for students that just took the foundations course, we'll do a PMP at 8. And then Thursday, we have Netflix earnings, PMP for Elite at 3:45. And then live trading will start around 4:10 for that. And then we'll do a Friday PMP as well for members at 8 a.m. for OPEX. Just to make sure that everybody kind of stays safe trading and doesn't take unnecessary risk. That's our first and foremost job, is risk managers. Any questions? I will post charts in the rooms after this ends. And if there's anything in particular you want to see, let me know. I do have analysis on others and currencies, but I don't always post all of those. Any? Oh, Zoom chat. Thanks, Mehdi. I don't look at Zoom. Just so everybody knows, we do the chats either in the Elite or professional room. Hi, Sergio. Welcome. On ES, on any of my charts, I have a kind of an indicator or something I've put together that gives me potential ranges and expectations for the day. And so a lot of times my blue levels are where I'm expecting bigger rotational zones. So like as we come into here and we hold, now I'm looking from 5109 that we could target up to 5170. Now my realistic expectation for today is that if we do come up, 5138 is where I would start taking some off. 5150 is really kind of my upper target, but we can rotate a lot of times through these. Let me see. So like this was yesterday with oil, 84 to 86, and we held 84. And again, it didn't occur during the day. It took until Globex, but we went from 84 here where that blue level was. So that this was the blue level yesterday up to that 86, and that was right here. We had the same thing happen on gold where we went from 23.45 to 23.85 yesterday. So that's where I'm expecting a bigger rotational zone. If we're outside of that, we're looking to go to these lower edges. If we're above this, we're looking to go to the red. Otherwise, the blue, we're looking to go just between, and then any references throughout there are either tradable levels or they are scale outs for me, depending on what the read on the day is. So an example today for me, and this is just the way I color my charts. If so this is why 2385 is the line in the sand. If we get underneath there, then it brings 2345 in the picture. Otherwise, over this, we're going to target up to this 20 to 29. But any of my charts, when you see the blue levels, that's my bigger rotational zone that I'm looking at. Sometimes it happens in a day, sometimes it takes a day and a half, and sometimes we'll stall out in the middle and then continue outside. But if we're in there, that's kind of where I'm looking at staying between. Yeah, you're welcome. Any other questions? Thanks for pointing that out, Betty. I appreciate that. I didn't see it. Yeah, no problem, Raphael. Just make sure, one of the things I've changed in my trading now, just so that you guys are aware, is I've scaled back on trading the NASDAQ as volatility is rising. The stops are getting to be too large. Again, our number one job is risk management. So if that fits in your risk profile, then great, still trade it. As volatility rises on the ES, I pivot more to favoring trading there and shift my focus. Otherwise, when volatility decreases on the ES, that's when I really focus on the NQ more. It's all a matter of risk on any given trade, and I'm trying to maintain a reasonable and consistent amount. So that would be the one thing I know I've talked to a few people about, and just something to be aware of in case these are things you don't always actively monitor. Otherwise, guys, have a great day. Again, Powell at 115 is going to be the big thing to watch. If you have questions, I will be around until about noon today. And then I'll be focused on my own trading until we do the roundtable at 2:30. Well, have a great day, everybody.